Hey, welcome into the live stream today. We're going to be jumping into some news around how banks are maybe moving into the crypto space in a variety of different ways. Definitely dive into that. And of course, we'll get to a Bitcoin update kind of involving all of this. And lastly, of course, we'll jump into some sentiment on all this good stuff. My name is Paul Barron. Welcome back into Tech Path. If you're new to our channel, maybe you're trying to get into crypto for the first time, trying to understand maybe where blockchain technology is going, this is the channel for you. We cover a lot of things here from, token analysis, a lot of deep dives, which you're going to see today. And then we do something really special, which is we build additional data on our sentiment platform, which gives us kind of some trade indicators, as well as just kind of market mover type analysis. So we'll dive into all of that. I want to get to this first story just as a reminder. 4 questions for for some of you maybe that are new. Make sure and jump your questions over on the sidebar. We'll try to get to those at the end of the show. So good stuff there. Also, best thing to do right now is like the video, because it helps, one, put it out there for other people to kind of know, hey, we've got a live stream going on right now at PBN. So those likes help out a ton. Let's get into the first story here from Finbold. This, of course, is U.S. Governor signs bill allowing Louisiana's banks to custody Bitcoin and crypto for customers. Now, when you see this, many people will go, gosh, why would I ever want to put my Bitcoin in a bank, right? But I'll kind of explain this, and you'll see some polls that we'll do throughout the show today. Let's kind of preface this in the sense of understand there's a large part of the population that still do not trust cryptocurrency, trust Bitcoin, especially do not trust, secondary assets. So you have to think about that sector of the marketplace and how adoption curves work. Same thing happened in the internet, same thing happened with mobile, same thing happened with social. No real difference here, except that we're dealing with people's money. So that's the big difference in terms of safety and security. That's why this right here is a very, very big issue, because if Louisiana starts moving in this direction, we're going to see other states falling into this, because they don't want to fall behind, especially with midterms coming up. A lot of governor races coming up as well down the road. So cryptocurrency market expands. The digital currency is becoming more widely adopted. This shows it by U.S. states looking at ways to incorporate them into the operations or financial institutions. One of these efforts, of course, is a bill that Governor of Louisiana, John Bel Edwards, signed, allowing financial institutions in Louisiana to custody Bitcoin and other digital assets. So this is going to get into where I think it will be very unique in the sense that we'll see other digital assets, maybe even to the point where you see NFTs and other things like that moving into the banking system. If you want to follow Dennis Porter here, just go to Dennis_Porter. And his Twitter handle right here is just kind of showing a little bit about what the act involved. But it's pretty straightforward. The key here, it's called Bill number 802. So if you really want to dive into it, maybe you're in Louisiana and you're going, wait a minute, there could be some action getting ready to happen here. But this will allow financial institutions and trust companies to serve as custodians of digital assets, to provide parameters and procedures and all that kind of stuff in related matters around crypto. So again, this gets back into something we've talked about here on this channel for quite some time, and that is bank and the banking industry is coming. If you go back on our channel and look all the way back last year, we interviewed a team from Vast Bank out of Oklahoma. And we already kind of indicated that we were going to see a lot more of that. And I have a feeling that at this point, we are going to really start to see a ramp up in how the banking starts to play into this. And there's a lot of other ancillary sides to this that really kind of flow into where the strategies are going. And if you follow the big money, you follow how late stage adoption will look. Because remember, in a bell curve, wish I had my whiteboard, it kind of curves up just like a bell, the top of a bell. We're in at the very beginning of that bell. So it's where most of the growth will occur. You're going to get to the next stage of adoption, which will be on the next bull run. And that is a different period in time in which the next level of risk takers and mostly structured capital in this particular case starts to come in. Then you're further up on that bell. Numbers start to shrink a little bit. This most likely will be in our next bull run cycle after 2024 in the next halving. And then moving on the way to like around 2035 is where I think we'll see some of that, 2035 to 2040, in terms of late stage adoption. Late stage adoption, remember, banks move very slowly, so what we'll see is very small amounts of this moving in that direction. Remember, put in your questions over on the side. We'll try to get to as many of those, and also hit the thumbs up. Smash that like button. It's a great way for us to understand if you like these deep dives. Here's Visa launching Bitcoin and crypto-enabled cards in Latin America. And this is another big, and this is one of the things that I've talked about a lot, and that is that Latin America is actually one of the hotbeds that are a little bit underserved and maybe unreported, obviously outside El Salvador, but unreported on the fact that there's a lot of Latin American countries and residents that are very interested in how crypto and the evolution of crypto is going to look. So Visa, one of the biggest payment companies in the world, launching a series of crypto-enabled cards in partnership with several fintech startups. Again, this gets back into the banking system. These cards are going to allow users to spend crypto, purchase crypto where Visa cards are accepted, etc. So again, also receive crypto back, cash back through different fintech partners in the region. So I think this is just another sign that banks have warmed up to this, and this is not something that we are going to see slowing down. As you can see right here, crypto ecosystem continues to gain momentum in the region, increased investment, more consumer adoption, and more crypto-enabled use cases, and we'll continue to build our strong strategy to really kind of roll this out. Then you look at their instances of cooperation. I think this is another thing. You've got Lemon Cash in there, so they've got an alliance there, which enables the Argentinian customers to do this. And then you've got Borja Martel Seward, the Lemon Cash co-founder, also talking about this. And again, this gets back into countries, I think, that if you look at Argentina, obviously there's a lot of economic problems in Argentina, but when you look at Argentina, you're going to see other countries like Mexico, I feel, that we'll start to see a lot of action in this space. So definitely coming in. The other thing that has to happen is you're going to look at retail involvement, and that's going to come in the way of Shopify, who is unveiling token-gated commerce as part of a new connect-to-consumer experience. This will be interesting of how this starts to play into, not only retail, but also kind of the whole aspect of creating recurring revenue, and also the opportunity for customers to get much closer to retailers. So they've called this Token Gate. It's going to be available early in access beta mode. Sell where you want. You'll know Twitter is going to be integrated into this. So the next time you have a tweet during doing numbers, you can also plug your own products instead of someone else's, and you're going to see some interesting things coming out of Shopify. Here's the tweet that kind of talks a little bit about the token-gated experiences that are happening, and I think we'll start to see more of this. And the likelihood is, whether you look at Block or you look at things that Strike are doing, but more importantly, some of the social media products. I think Instagram, Facebook has already talked, Meta has already talked about integrating more NFTs into Instagram. We'll see it coming with Facebook as well. Again, this is all going to need payment layer and/or transaction layers that will eventually tie into some sort of crypto connection for sure. Let's get over to this topic right here, and this one is a little bit more on the bad side. I guess if you think about it, it's kind of the good side, but there's some bad things to this. SEC Commissioner Hester says no to crypto bailouts, and essentially I think that the industry itself probably doesn't want to bail out from traditional finance. It's a little bit of a black eye, but at some point I think when you're struggling, having problems like someone like a Celsius, etc., you kind of start to do strange bedfellows. It does start to create a very interesting thing. But he did say that the industry would not support bailouts in crypto, especially if the companies were over leveraged. Now that was an interesting statement. Especially if the companies were over leveraged. So most of the time, these companies are going to be, if they're looking for bailouts, most likely they are over leveraged, and that is a commonality that we've seen in a lot of the early stage scenarios. Now, where this could come into play is down the road. So I think they've left a little bit of an opening for this, and that is after we see, kind of the flush of the over leveraged, pretty much getting an exodus or a pass to the hall, we'll start to see slowdown in the sector, and this could happen during the next, 4 to 12 months, depending on how a recession truly hits. And I think that's where it's going to play into a lot of potentials of where there are good companies that maybe just don't have the startup cash and revenue that are going to kind of fall by the wayside. That's where you stifle innovation. And sometimes that kind of comes into it. But prices sees opportunity in downturn. This, of course, the Fed lead talking about market as an opportunity for all stakeholders. When things are a bit harder in the market, you discover who's actually building something right. It's interesting that they say this now when this was never said in 2008 when we bailed out savings and loans and banks and, you know, airline companies in 2021. I mean, it's interesting how it's a little bit convenient. So interesting stuff. Crypto does not have a bailout mechanism, and that has been perceived as one of the strengths of the marketplace. I don't want to come in and say that we're going to try to figure out a way to bail you out if we don't have the authority to do it. But even if we did, I would not want to use that authority. We really need to let things play out. And this, to me, is a very strong statement, but at the same time, it is also kind of letting this market become what it needs to be. And this happened in the early stages of how regulation was done on the internet, because we saw a ton of companies that really just went to zero. And if you go back into the ICO craze, a lot of those companies back in 2017 went to zero. There was definitely no talk of bailouts then, but right now we're starting to get into a lot more structured capital and a lot more retail investors. So it starts to skirt the line as to whether or not there should be some protection there. And of course, they're talking about all that. Make sure and hit the like button. By the way, we're going to be doing something really cool, and I'll show you guys this here shortly, is a unbelievable crypto portfolio of buying at the bottom. And how we're going to assemble it is a very unique way. I don't think it's, well, I know it hasn't been done before, and you're going to be a big part of it. I'll show it to you, break it down for you guys just to get into it. Let's go over here to this CoinDesk article. Bank of America survey showing consumers aren't done with crypto yet. Again, this goes back into more banks asking whether or not they should start doing something to allow their customers to really get into crypto. They conducted a survey of 1,000 people, potential users of cryptocurrency. Found 91% of respondents intended to buy crypto in the next 6 months. That's just crazy. 91%. Who were these people? I mean, that's huge. Selling expectations are also steady, with 30% saying they do not plan to sell any of their crypto holdings in the next 6 months. That's smart, but it should have been much higher. Unchanged from the percentage who said they'd sold crypto in the previous 6 months. And then the average transaction size is varied. You know, a lot of this is fairly small at this point, but we are going to see some growth here. And then crypto made up less than 10% of overall financial investments for 65% of the respondents. Now, 10% of overall financial investments, I'm kind of curious, you know, we should probably do a poll on this, is what percentage of your overall financial investments, not your total liquid, just your investments. So let's say you're worth $10,000 and you're investing $2,000. That's 20%. I'm kind of curious as what our audience is doing in this area, if that kind of aligns with this. Majority of respondents were short-term investors, though, with 77% normally holding crypto for less than a year. To me, that's a big problem, because I think that's a narrative that people need to get past. If you are new to this channel, you will not hear get-rich-quick schemes. You're going to hear facts, news, data that we can support, and you're going to get what I think is a much more conservative approach, at least the way we approach it. It is something that is just like any other investment class. I truly believe that it takes time. Now, granted, it does move quicker. There's a lot more volatility. If you're a little shaky or you have short-term thought processes around investment, you're going to lose. But if you're looking at more long-term plays, much like maybe you're looking at in some of the stock market, there's an opportunity, I think, here for it to really play out in your benefit. So think about that when you're not in that group. Here's another piece right here, and this, of course, is Citibank chooses Swiss firm METACO for digital asset custody. It's interesting this name came up. METACO came up. We did a lot of research on them last year, and it was in the period of time in which we were studying banks, how integration would be done. This was over a year ago that we really got into this, and I knew that they were going to do something. We actually almost had their CEO on. We're going to reach out and try to get an interview. But now Citibank has selected cryptocurrency custody firm METACO to develop the bank's digital asset safekeeping capabilities. This simply means that if you're a Citibank customer, most likely we're going to see something around self-custody capability within that. And again, remember, if you just jumped in and you heard that term self-custody by banks and you're thinking Paul's gone crazy, I want you to rethink that, because the scenario is late-term adoption. Late-term adoption, masses, it's, your moms, your dads, possibly, some boomers that are out there. Not saying anything bad about boomers. I'm just saying that there's people out there that are just look at crypto differently. They have a much shorter term horizon of how they want to manage their, their portfolio. And they also are looking at different kind of risk levels. So risk tolerance is a big deal. And when that is the case, banks are always looked at as being one of the safest. So if someone can, and think about this, late stage adoption seeds that market that only continues to lift it. So we do need that. And the likelihood, I'm just surprised at how banks are moving in so quickly. But at the same time, with DeFi taking some, it's held okay, but with it taking some hits from the leverage side of things, we're seeing a lot of entities such as, obviously we've been talking about this for months, it feels like, with Celsius and so on. This may be an opportunity for some of these guys to get into the game faster than we anticipated. So don't forget, put your questions in the sidebar, and we'll definitely are going to get over, and I've got a lot to talk about here today. I want to just make sure we get a couple of things here. One, of course, is our sponsor, and that is iTrust Capital. If you guys are looking at doing something long-term and you are, because listen, if you're buying in today's, climate, one, you're coming into crypto, I think, in a very good time, because it's great to be in these markets when they're this far down. I know people don't love to hear that, but that only means that when we see a bottom, guess what? The next thing is up. And it means that we start to see the economy start to adjust, a lot of things start to change. There's a lot of things that can play into that. And one of the safest places, at least I look at, is long-term holding positions. There's some places that you just are going to hold term, but you have tax exposure, you have those kind of scenarios that you can't really, you're going to end up paying capital gains on all of your gains, those kind of things. This is where a crypto IRA starts to play into it. So iTrust Capital, take a look at them. I think they are one of the top IRAs out there when it's available in crypto. And there are some charts out there. I'm going to bring this up on one of the shows coming up that shows you the kind of IRAs you can roll over and a whole array of stuff. But they do a really good job on educating people. So just check them out. You get a $100 refunding reward by using our link down below. All right, so I want to jump over to this topic right here. After inflation fiasco, central banks now want to monopolize trust in money with a CBDC push and crypto bashing. Now, this is something that if you guys, I have not been on this site. That's interesting. This one is interesting because we've talked about this. We just put a video, we're getting ready to drop a video on this around MiCA, which is markets and crypto regulation in the EU. And there's a lot happening within the EU. You guys, if you're looking at crypto as a long-term play, you need to pay attention to the global field. It is not just what's happening here in the US, or if you're an international audience, not just what's happening in Europe or Pacific Rim. There's a lot that is going to start to inflow in and around, especially the G20 countries, where we're going to see more and more regulation. And a lot of it is going to be cut and paste, meaning something like MiCA, which is the regulatory guidance that is well on its way to being real in the EU, is most likely going to be a guidebook for a lot of other countries that will start to implement. And the regulations are very, very interesting because it does put a lot of pressure on the exchanges. It puts a lot of pressure on the stablecoins. And we're not sure completely how we're going to see NFTs and other digital assets play out. So you need to be paying attention. This is where it gets very interesting, though, in this topic. And some highlights here I wanted to show you. They're admitting to failed to keep inflation under control. This is central banks. And sharply rising rates threatening to push economies into recession. We've already seen that in Europe. And now you've got BIS, sometimes referred to as the central bank of central banks, is out with a new report where it's literally just crushing crypto while promoting what it calls a brighter vision of future monetary system. This is the CBDC things that we talk about all the time. This is something that concerns me probably on more of a global, moderate position. Whether you're political or not, you understand that there is a lot of overreach in government. And when you look at the global stage, it gets even more so. So you have to think about what self-custody is going to look like. And will crypto survive that kind of push from a central bank digital currency type of approach? Because we could get into, let's just kind of say it. I mean, you're going to possibly get into where we're going to see a centralized component. Now, would that happen from banking? Would that happen in the next decade? Remember, these things play out for a very, very long time. So it's going to be interesting to see how this one plays out for sure. But the wheels are turning. Don't forget, put some questions in over there. I see a bunch coming in. Good stuff too. Lots of good questions. I'll try to get to as many of those as we can. UK makes a turnaround on KYC rule. This is good. The Treasury in July 2020 released a document that forced crypto firms and individuals to collect personal data on transacting parties. Crypto assets firms will have to put place in systems to ensuring that personal information of the originator and the beneficiary of crypto assets transmitted is received alongside the transfer. So that, I think, is probably going to be good, because these, again, I don't think people are trying to shy away from KYC. I think the key here is making sure that there's some sort of structure in place. What they talk about here is, instead of requiring the collection of beneficiary and originator information, they're basically going to only expect to collect the information for transactions identified as posing an elevated risk of illicit finance. This, to me, is huge, because this means it's back to what we have here in the US. Normally, you're not scrutinized in your own banking outside of certain things. And there's certain triggers that you guys know, I'm sure, if you're in banking and if you moved any kind of real money around, you know what happens. There's a lot of disclosures that have to be done at a bank. The likelihoods we'll probably see that flowing into. So again, we're getting back into banks that are really kind of flowing into a lot of these kinds of participation areas, and the regulations that kind of flow into this that kind of also help this kind of establish some sort of guideline. And this is going to be interesting to watch for sure. Despite the turnaround, new rule transfers burden of collecting personal information on the crypto asset firm facilitating the transaction, so it's going to be another step. In addition, the firm is going to have to collect data for transaction identified, obviously, on the illicit finance side. And then they talk a little bit here under the FATF disclosure. This is transacting parties forms. This is under AML, anti-money laundering, CFT standards. This is a prior decision to the forced data collection, regardless of the technology used to facilitate. So this is going to be banking and crypto as well. So all of that still, again, playing big time into banks and what this looks like. Edge also announced confidential no KYC. This is the opposite end, no KYC of digital currency for a MasterCard. So again, what this tells me is that there's going to be a heated battle here for your money, for your crypto, in a space that is evolving quickly to digital assets. And because of the fact that we're seeing now MasterCards and things like that going into no KYC, I mean, have you ever heard of such a thing other than prepaid debit cards? That's kind of about the extent of it. Or burner phones. I mean, essentially, that's what you've got here. So on Wednesday, it's a self-custody. Edge announced a know your customer debit MasterCard. And this can be funded with Bitcoin and other digital currency without KYC verification. I don't think this lasts long, but it's interesting in the sense that it exists, because again, it gets back into financial instruments that are going to be coming at the public, I think, in a very, very big way. You guys already know this today, is that we've seen so many new things coming at us in terms of just how you operate within crypto. There's a lot of very creative stuff out there. And whether you're using self-custody, maybe you're using something like a ledger and you're swapping. Maybe you're using bot trading. Maybe you're using DeFi, or maybe something within the exchanges themselves and parking funds on USDC. There's so much there, man. So you guys are in good shape for sure. Let's get into Celsius calls on Citigroup for options. We talked about this earlier, but again, this just goes back into my topic here today, and that is banks are coming in fast. This will be good and bad. The bad is it's going to push regulation at light speed. The good is it's going to bring in late stage adoption, and I feel like we will see more and more integration. Now, the other bad is we'll probably start to see less and less in the way of revenue opportunities for you guys, so and me. Citi, Wells Fargo, BNY Mellon also invest $105 million in crypto infrastructure firm Talos. This is also where it gets big because, again, I think when we see more of this happening, and I've talked about this before, this is a perfect storm of what's happening right now within the crypto community. Everybody's laying off, right? We've seen literally Gemini, Coinbase, you name the company outside Binance, that have been cutting staff. Then you've got smaller organizations that are cutting staff and or repositioning and just slowing hiring. But what's happening is all that Web3 talent is starting to look for places to go. And guess where they're going? They're going to Web2 or they're going to traditional banking. That's why I think we're going to see a big wave of movement here in a very short time. Let's go over here just as a reminder. JP Morgan wants to bring trillions of dollars to tokenized assets to DeFi. Again, this is JP Morgan. Chase, you're talking about one of the biggest ones out there. And this is another reason why we'll continue to see these guys understanding that legislation is just around the corner. This is something that I talk about on the channel a lot. And that is that, and we'll guide you through these things, is that as we start to lean into a recession, a lot of people will say, okay, wait a minute, we're getting into a recession. Shouldn't I slow down? The reality is, as you don't want to be, timing is very critical here. So you don't want to be in at the beginning of the recession buying because there's going to be a lot of pain in between. You could wait for that period of time, but timing is going to be very critical here. So you've got to watch a lot of the macro indicators to kind of keep up. But towards the end of that macro indicator, the minute that you start to see a little bit of the tilt, that's when big money starts investing, like JP Morgan saying, we want to bring trillions of dollars into tokenized assets, into DeFi. That's exactly what I'm talking about. And that is when the triggers start to happen, and that's when we start to see parabolic runs. So a lot of those kind of things. I know we're running a little bit long here, so I want to get to questions for sure. Fun fact, Bitcoin has a larger market cap than JP Morgan. I would hope so. We're talking Bitcoin, man. Talking Bitcoin, there's Matterport. Okay, Prime Trust raises $107 million to add new crypto products. Obviously, we know about that. These are just some good headlines to kind of show you guys on what's kind of rolling in here. A lot of good stuff, because I think there's a lot of FUD in the market right now overall. And at the same time, there's a lot of really good news in the sense if you think and look at this on a more long-term strategic role. So digital asset infrastructure Prime Trust, $107 million in a Series B. This is investors. This is FIS, Fin Capital, METACO Partners. These guys are traditionals. Kraken Ventures, that's different. Commerce Ventures, William Blair and Company. These are not Web3 guys, okay? Growth Fund, GateCap, that is, and then Seven Peaks, all coming in. So firm also raised $64 million in Series A. This was back in July. So this round is going to bring them up to $170 million. So again, this gets back to my whole point, is that these kinds of raises from traditional finance being a big part of that is a good thing for the future. Here is an interesting chart right here. These are the top banks investing in crypto. And I'm going to try to zoom in on these because they're so you can kind of see that. This is the block data. There's Standard Chartered. This is London. 789 assets under management right now. Size of funds round as a proxy investment around 380. They're doing Ripple, Cobalt, etc. You can kind of see some of these. So take a screenshot of this. You've got BNY Mellon in here, Citibank, UBS, BNP in here, Morgan, JP Morgan, and then Goldman, Barclays, and MUFG all coming in. And you've got a lot of digital assets moving in this space, including a lot of the digital assets that circulate around it, which are mostly rails and or companies that will benefit from the benefit of what's happening in crypto. So very interesting stuff for sure. Coinbase shares are falling after rival Binance US drops spot Bitcoin trading. This gets back to my point of where we see fees dropping across, and we'll see this. Robinhood kind of led the way with this. I think we're going to see more and more of this in the exchange side of things, but it's going to put a lot of pressure on banks to do very similar activities. And when we see this, it's a good thing for the market because it really creates a unique and different way for these exchanges to try to figure out how to make money. And so we're going to be seeing more creative products coming out of exchanges and also out of the market itself. So there it is. That was the tweet that went live with CZ. Binance US starts zero fee trading for Bitcoin. This is going to be big for them. It's going to be big for them. Now, will we see, spreads and things of that nature? Most likely, that's got to be the case here. But still, zero. I mean, if you trade much on Robinhood, you kind of know those kind of things are happening. That's how the back dollar occurs. I want to jump into a video real quick. This was them talking about the Bank of America, or one of the bank pieces that we just talked about here. Hang on just a second. I want to play this one.
So this was a survey of just over 1,000 U.S. adults, and it was conducted at the beginning of this month on June 1st. This was obviously after the collapse of Luna. It was obviously before today's headlines, but that was the sample size, so it was pretty significant. And it was interesting to see that 90% of respondents said that they do plan to buy some amount of crypto in the next 6 months, and that was actually the same percentage who reported having actually bought some crypto over the prior 6 months, for example.
Why do they want to buy it? As a store of value? I also saw in the survey.
All right, so just a reiteration that this kind of activity is happening out there, and the banks are taking notice, and it's really kind of drawing a lot of attention to them. And I want to show you guys, before we get into the questions, a couple of things. I'm going to jump to a couple of tweets here that I want to kind of just show up. Here's the update, of course, with U.S. economy is strong. This is the other thing that really kind of plays into this, and that is that we're facing a little bit of an uncertain global environment and could see further inflation surprises. This is the thing that I am concerned about most right now, and that is the position that we'll see, because there's a lot of unknowns still that are putting pressure on the economy other than the macro knowns that we have in place, and that is things like obvious inflation. We've got energy scenarios, prices are running rampant, inflation is real, and we haven't yet seen the jobless numbers start to creep up, which will be, unfortunately, a good and bad omen. Good for the sense that it'll probably pull the pressure off. Bad because its jobless numbers are up. But those are the kind of mental things you have to jump through in these cycles that gets you past them. And it also starts to put pain on the companies that need to go away and that are essentially, as Elon talks about, they're just consuming resources. So this is something to keep aware of. Now, banking, these guys are a long play. Don't think that this is going to turn the markets quickly. These guys are a long play. What you need to be aware of is what this looks like into the future because of the position that you're in right now, which is very early. So big stuff. Just as a quick view, we'll look at where Bitcoin is today. We just dropped the CPI numbers. Let me jump in and log in for you guys. And if you've ever been to our website, you can jump in. This is my product page. We've got Diamond Circle, which is free. You guys can join, very easy. If you want to get into the Power Index, this is where we do all the breakdowns. I'm going to go over to Bitcoin real quick, take a quick look at our latest data in there. And there has been a little bit of trending downward that we've been talking about here for the past 3 data drops, which we do 3 times a week. We picked up the early, obviously the early drop last week when we saw Bitcoin go down to 17. And now we're still trending down, even though we are kind of a little bit flat right here on top line sentiment. Amplification, which is a leading indicator, is still trending downwards. So in short, what that tells me is that there might be some buying opportunities here under 20K, which is kind of where we're hovering right now. So lots of cool stuff happening out there. One thing that you can also jump in when you are in our mastermind group, you guys have probably never seen this. This is our Slack channel that our mastermind group gets into. So if you've joined, you're going to notice that you've got access over here. These are a lot of our members. This is where we drop a lot of early trading signals. We'll drop additional data, a lot more of our research, all sorts of things that typically only gets done here on our research side and that we drop into the mastermind group there. Now, as I said, big surprise for you guys, and that is something that we're doing here coming up on the show this week. And it's going to be our crypto portfolio build. We're going to be doing a buy the dip or buy the bottom. And what we're planning to do here is give you 8 parts to this. So you're going to have layer 1s, layer 2s, some metaverse and gaming, some exchange tokens, payment tokens, utility, NFT ecosystem, and then audience picks. The way it's going to work is each show that we do this on, you guys are going to be part of it. And what that means is that we're going to build a program that looks at sentiment across 3 different things. We're going to look at the market CPI, which is our power index rating. We're going to look at my own personal ranking of these tokens. And then we're going to look at the audience ranking. And each one of those buckets will be a third of the overall data. And then we're going to do just standard stack ranking. If you guys know anything about stack ranking, we'll have 30 tokens. We'll cut the lower 20%. And then we're going to invest. I'm going to take 20K. 10K of that 20 is going to go into Bitcoin and ETH. And then the other 10 is going to go into our stack ranking group of tokens that you guys have helped us build. So be on the lookout for that show. It's going to be fun because you guys get a chance to participate. And we'll follow that along. We'll follow that portfolio along through the rise, and you'll get a chance to see it. So maybe if you're watching this a year from now, you'll be going, man, I should have been there at that time. All right, thanks for the super chat, guys. As your team research Web 5. So Jack Dorsey is really talking a lot about Web 5 and kind of the evolution of what it might be. Really the core of what Web 5 is payment rails within the infrastructure of how web dev would be done in the future. Everything would have payment rails built into it. So I think this is good. Lord Byron. It's the Kevin O'Leary bull thesis. Again, banks mass adoption. How will grandma and grandpa use crypto? I don't know that if they're grandma and grandpa today, if they'll truly use crypto, but they might buy crypto at some point. Use case scenarios, I think we are still maybe a real decade away before we see mass use case. It's being used today quite a bit, but only by the super knowledgeable and by the crypto curious. There's a very small portion of the market that's going there. Safety on FTX, Edwin. I mean, you've heard me say this before, guys. Diversification is very important. I'm on a variety of exchanges, a lot of which I've exited a lot of my core assets into self-custody. This is just a strategy I think that is good for all, is that you should look at how to do those kinds of things. It's important. And again, when you are doing self-custody, you need to take super care of that, including maybe it's storing in a safety deposit box, putting it in, off-site, putting it in places that, would never be exposed. So because that is, even that can occur, you can still, obviously with your passphrase and also your core access, you can still get to those things, even if you lose a ledger or something of that nature. So what are the requirements if someone wants to accept crypto payment on his or her business? It's pretty easy. There's a couple of companies out there. I won't name them because I don't want to pick winners and losers, but there's several out there that you can do this now. Several that are very effective, and they have a lot of good customers that are doing it. Watch some of our shows. We've talked about this a lot. If it's insured, before we get to that question, Ryan's. Let's jump over to the poll real quick because I want to see this one. All right, so who would you trust most holding Bitcoin? My traditional bank, my crypto, or my self-custody hardware? Wow. So, man, we got a lot of people here that are not trustworthy of the system. Interesting. All right. I know there was a question on there. Yeah, Ryan, if it's insured, I think it would be safer than being on a platform such as Celsius. Listen, yes, but it's not going to be insured till it's regulated. And when you say if it's insured, I'm assuming you mean crypto, not U.S. dollars. If it's U.S. dollars, Some exchanges already offer FDIC insurance already, and you get up to $250,000 in FDIC insurance on any engagement that's going there. But if it's Bitcoin or USDC, that's not going to be insured. So be thinking about that. Super chat, thanks a lot. Have y'all looked into Metal Pay? Topics fit perfect with what they're doing. They have a transmitter license and a combo back exchange. Listen, there's a lot of companies that are going to be coming into this space. I think we're going to see a ton of innovation. I think the banks are going to, though, unfortunately, will buy up a lot of these upstarts and probably eat it alive for sure. Banks know there's a major financial change around the corner. That's for sure, Kryptonian. You've been reading and drinking the Kool-Aid. Banks give us false sense of security when they seem to be always the ones needing to be bailed out. Yes, very, very true, for sure. I would agree with that. But at the same time, we've also kind of put, I think to a certain extent, jettisoned most of the bad ones. Now we kind of know who the bad ones are. So the bad players, the dance cards are out. Back in the day, you didn't know who they were. People want crypto because they're fed up with the banking system. I don't wish to see don't wish to see banks run with this. That's for sure. They definitely, ruin it, for sure. I mean, can it ruin it or can it help? I think in late stage adoption, it's most likely going to help. Downside of custody at banks is that they're always known to kick back crumbs on what they take a little low. There's going to be a lot of creative ways, creative financing within the banks themselves, for sure. I'll hold with a bank of Bitcoin as FDIC insured. That'd be an interesting thing, Christopher. If a bank came to you and you said, listen, we'll custody your Bitcoin and we'll give you FDIC insurance and we'll pay you 3%. What would you do? That would be an interesting proposition. I bet a lot of people might take that. Downside of custody to custody at banks. Downside to custody. Downside to custody is the bank goes insolvent and there's a bank run. That's the downside because they got your stuff. And if it's FDIC insured, at least that would be the case. That would be the plus side. But if it's not, it's another Celsius. Will Citibank buy Celsius? I don't know. At least the fact that they're dancing, I think Celsius is, and I mentioned this on the Celsius update yesterday. There's two options for them. OG crypto, try to go the route of DeFi, some structured creative finance, really get involved and maybe have to do a deal with some of the exchanges or something of that nature. Or, and there's a lot of challenges there and a lot of hurdles for that to come. Or the other option is you got to do a deal with the devil, and that is you're going to jump in with the banks, and maybe the bank comes in and says, hey, listen, I'm going to rebrand this whole product. We're going to build it into another product, and that 1.7 million customers are now going to be on our books, and we're going to give them allocation of being able to get their funds out. They're just going to get transferred. So they'll soak them up into banks, things of that nature. I think it'll be interesting. Are banks over levered similar to, yeah, they are. Because remember, fractional reserve financing is real. A bank can lend out your dollar, I think it's 9 times. It's just like DeFi, and it's as degen, in my opinion, as DeFi, because you don't really know the creditworthiness of who they're lending to. In many cases, it might be doing it into bigger deals or smaller deals. There's a certain amount of bad debt that rolls in, and you start to see a lot of bad debt roll in. Remember 2008? 2008 was a big one because 2008, we saw a lot of bad debt literally crush the real estate market with bad loans. Those are the kind of things that can happen. So remember, we're going into a recession here. So this is not early. Again, this is more about giving you guys an awareness of where the market is moving, because these are the kind of things you have to be studying a lot right now in educating yourself on when and where to make moves. Because right now is the most important time. If you're in crypto today, it is the most important time of your life, because I don't think we're going to see these numbers again. Frank Santana. The poll should have been done, including the yeah, I think so, because you're right. I think over 55 might choose banks, but you might be surprised there because that poll that they were talking about with Bank of BOA was talking about a lot. I would assume a lot more younger customers. Self-custody hardware wallet in a security box in a bank with the recovery keys. That would be interesting. I don't know. I think first of all, I think you got to put your recovery keys in a different place than you put your hardware wallet. You don't need those two together. And then you need those things in other security places. If you had a lot on something, you would want to do that. Just drop it in a safety deposit box or into a secure location. There's been some companies out there that are starting to do this that are attorneys and also financial organizations that are starting to do custody locations for things like this with security and all that kind of stuff. Citibank has DeFi service, would be very interesting token, would be. AK Crypto, other than a hardware wallet, I put in a bank at this point, then a platform. Ooh, all right. So again, you're already starting to see, what happens if we have one more of these go down? What would you guys do? If you had one more go down, another Celsius-like entity, stop withdrawals or limit withdrawals heavily. Maybe they go from, daily withdrawals that were X amount and they cut those in half. What does that tell you? Is there a concern there? Would you start to really reconsider that? Tom's Diner, I've been trying to explain blockchain to my mom. Hard times. Listen, don't worry about it. You have to have a use case in place for people who don't understand. It's like the internet was. Nobody understood it when it was created. Nobody said, why would I ever need it? What would I ever do with email? What would I ever do? I don't need that stuff. Yeah, I use a fax machine. You guys know what a fax machine is. Okay, Vincent, you're 71 and using DeFi? Dude, you are killing it. That's my man. That's the kind of people we have on our channel. Is we've got some, crypto savvy around all over the place. Good stuff. Lots of good questions. You guys always have some of the best stuff, for sure. Good stuff too, man. You guys are always crazy. Listen, if you guys want to listen into, maybe you don't have time to watch all of our YouTube shows here, jump over on the podcast side of things. You can actually flip it out onto the audio side and just search on Spotify or iTunes for TechPath Crypto. You'll find that show, which is this show here. And then you can also search for Metaverse Insider, which is our Metaverse and NFT show. It's very easy if you can't catch the YouTube channel. But listen, this is the place to catch it all because that's where we're going to be breaking down. And don't forget, coming up is the crypto portfolio rundown that we're going to be doing very soon. So we need you guys' help to really kind of build that out. So make sure and stay tuned here on the channel. Watch your notifications. Hit the bell. That's going to start sending them to you. All that good stuff. Hit me on Twitter. It's out there at Paul Barron. We'll catch you next time right here on TechPath.